let's jump straight into the projections, and we're going to answer 3 key questions here. First, what is a projection? Second, why do I need one and why should I care? And third, what is the best way, or what are the best practices for building one or getting one? So as I mentioned earlier, a financial projection is really an estimate of what you think is going to happen in the future. That means what kind of future revenues you think you're going to generate, what your future expenses are going to be, and what your future cash needs are going to be. So remember, we talked about those financial statements. Here's where I'm going to tell you already that there might be one you don't need to pay so much attention to. And in fact, I'll tell you that most projections are focused on the profit and loss statement or the income statement, right? Because ultimately what you need to understand is what your revenues and expenses are expected to be. Now, that means that on your projections, 2 of the key elements that you want to pay attention to are your gross margin and your EBITDA, and how those change over time in your projection, right? You would hope that they would either stay stable or get better over time. If they're decreasing, you're probably going to want to understand what's happening in your business, because that can be a warning sign. Now, you will not necessarily model a pro forma cash flow statement, but it's very important for you to understand the elements of cash as they relate to your profit and loss projection, because if you don't have enough cash to cover your operations, which is often the case in an early stage business, you need to make sure that you've found a source of financing, meaning a source of outside capital, that's going to allow you to keep your business going, right? Because again, like we talked about, if you don't have enough cash, it doesn't matter that you're making money, because you won't be able to pay your bills and meet your obligations. So generally speaking, you're going to spend a lot of time probably projecting the income statement or the profit and loss, and you want to be sure that it includes an element of your cash flow if it doesn't have a full cash flow statement, which is honestly a little challenging to create. However, the balance sheet, I will tell you that although elements of the balance sheet, particularly your payables, how much time it takes for your clients to pay you and how much time it takes for you to pay your suppliers, those are important for your cash. The rest of the balance sheet is less important, especially in the early stages. And the reason for that is that investors and pretty much the other people who might be involved in your business are more interested in the market value of your business than they are in the book value of your business. It's not to say that you don't want to have a balance sheet and that you're not going to report your actuals in a balance sheet. But when folks are looking at your business and trying to understand what it's worth, they're not as concerned about what the book value, meaning the accounting calculation of value is. They're a lot more concerned about what your business is worth in the market. And that generally can be determined by other factors that are related to both your profit and loss, directly to your profit and loss statement in most cases. So as you think about projecting, focus on the P&L, profit and loss statement, but make sure that you include cash flow. Don't get so worried about the balance sheet. So remember, we talked about this, that you're going to have to connect these 2 together. And so what I want you to start thinking about your projection as is a goal setting exercise. And so what you're going to do when you create your projections is you're going to set yourself some revenue and expense goals, and you're going to set yourself some cash flow goals, meaning here's how much money I'm willing to spend that I don't already generate from my business. A lot of times that's referred to as your burn rate. And you also need to set for yourself some ideas of how much money you might need to bring into the business to make it, for example, through the next year. So quite often these projections are done on an annual basis, but you'll see as we get into it, they usually don't stop there. So you want to keep in mind that you want to learn from the financial projection, your revenue and expense goals, but you also want to understand how much cash you need that you don't already have. Because ultimately, if you have a plan but you can't execute it because you don't have cash, then it's going to be really challenging.